If you are a fan of roller coasters, you have picked the right thing to do, which is to watch Tesla stock and or the entire stock market, bond market, whichever market, gold market, Bitcoin. Pick your market. If you like roller coasters, this is a great time to be alive. Well, we have, of course, important business taking place today. The Fed will give us their decision as well as their commentary later this afternoon. Everybody's eyes are on that, expecting, of course, maybe some kind of a hint of a September drop in rates. We'll talk about that a little bit more. And then this morning, we've had Tesla up over 10 at one point. We'll check that before the end of our commentary this morning as well. I think what's important right now in terms of Tesla is this. Here's what's critical. They are having extremely fast progress on all kinds of tech. So number one, the installation of the GPUs and the Dojo computers in Austin is happening right now. They'll be turning that whole system on. It is rapidly becoming one of the largest supercomputers in the world, matching probably be second only to 𝐓𝐞𝐬𝐥𝐚's supercomputer up in Memphis. So this is critical. It's very, very important for Tesla to become number one in this category, even if it's in combination with another Elon Musk company. One way or the other, they need to get to whatever it is. We've been talking about that a lot the last couple of days. Whatever we're shooting for here, whatever AGI really means, whatever it really means to be the leader in this category. Now, I don't think there's any question, and many, many folks on this channel have said, there's no question that Tesla is way ahead in the actual application, the actual use cases, in actually getting income from this activity. They are way in the lead and probably will continue to be in the lead with the Optimus coming on stream and with, of course, robotaxis. Number two is that the first Cybertruck with dry cathode 4680 cells has been formally announced. It's out there. It is being driven around and tested. And there's probably zero chance, just barely more than zero chance that this will not be successful. And we will have dry cathode 4680s in mass being produced by the end of the year. This is a breakthrough. It's incredibly important. It lowers the cost of the entire project. It reduces the footprint in the factory. It makes the 4680 everything that it was supposed to be in the beginning, and is underreported, very much underreported. Full self-driving 12.5.1 is a step change improvement. Every single video you're watching on X right now, everybody that's talking about their experience here on this channel says, look, it's done, it's finished. It's just really a matter of putting on the finishing touches, the reverse, taking care of some parking, making sure that it can do the final parking, summon, all these last little bits need to be put in, and then just keep on keeping on with regard to the data, and we'll be there. It's just a matter of weeks or months, maybe into next year, but most people are thinking it's going to be done by the end of this year, including Elon, by the way. And then, of course, a 30-second throughput rate on Shanghai factory. No news. Nobody cares, but they should care. This is a 30% increase in the throughput rate on the Shanghai factory. And what you're seeing is record high numbers of cars being sold in China in the third quarter. Well, if you can make more, then you can sell more. And with the low rates of interest that Tesla is charging in China, we're seeing that activity taking place. So that's just four major technological. I mean, these are not small. Every single one of those is huge, and yet being underreported, but maybe at least partially the reason we're seeing this choppy but trending up into the right effort on the Tesla stock. All right, so that's all the news there is this morning for Tesla. This is Randy Kirk. Hit like and subscribe and hit notify. We've got Scott Walter this morning on the road. We may even be talking to him in his vehicle, his moving chamber, as he calls it. Anyway, we'll be talking to Scott later today, and then Jeff Lutz later tonight, as we should have good news again on Wednesday. Please go on down there and do Patreon. That'd be fantastic. And okay, what we got here? We've got private payrolls, ADP numbers out this morning. Private payrolls increased by just 122,000 in July. That is the slowest pace since January, below the upwardly revised 155 in June and the estimated 150,000 that the street was expecting. So this is a big, well, you'd expect this to be a helpful thing with regard to the Fed's decision. It certainly doesn't hurt the Fed's decision. And so, of course, the market is very happy with this result this morning because the market is itching, dying for a decrease in interest rates. Wages for those who stayed in their jobs increased 4.8% from a year ago. That's the smallest increase since July of 2021, but way ahead of what the Fed wants with regard to wage increases. They want to be down around 2.5%, maybe 4.8% year over year. Not good. But that's being ignored today as the market just shrieks. Well, at least the NASDAQ. We'll look at that in a second. This is from Market Watch. Peter Morici, he's an economist and professor emeritus at University of Maryland and also a national columnist. He says, according to the SAM rule, we know about the SAM rule, we've talked about that a lot on this channel, named for its author and former Fed economist Claudius Sam, when the 3-month moving average for the U.S. employment rate exceeds the lowest observation for that statistic over the previous 12 months by 0.5 percentage point, the economy is likely headed for a recession. Of course, that's an observed statistical pattern, not a law of nature, and it could fail this time. But that statistic is now at 0.43. If unemployment rises to just 4.2% in July, the SAM indicator hits 0.5 and it'll be code red. And I'm saying that this is probably going to happen unless the numbers are jiggered with, played with, somehow not correct. This fellow goes on to say, is an immaculate deflation possible? The unemployment rate is not the best indicator of a labor market tightness. It only reflects the available supply of workers. A more meaningful statistic is the ratio, he says, of job vacancies. This is interesting. A labor demand measure compares the employed job seekers to the labor supply. Currently, that ratio is 1.2%, about where it was for the 3 months prior to the March 2020 when inflation was above the target at 2.4. An influential study by former Fed Chairman Ben Bernanke and economist Oliver Blanchard indicates that to anchor U.S. inflation at 2%, the ratio of job openings to employment would have to fall well below 1.0. And this would imply a much higher employment rate, closer to 4.5. Well, that busts through the SAM threshold and implies getting to the 2% inflation should require a recession, a full-on recession, or we must settle for inflation in the 2.3 to 2.7 range and the 10-year Treasury yielding 4.3 to 4.7. Inflation was unusually tame between the global financial crisis and the COVID-19 and well below the 2% target. Fed easing now risks establishing expectations for greater future volatility and inflation ratcheting up over time. For the 10 years prior to the financial meltdown, inflation across the entire economy was 4.0%, and the 10-year Treasury yield averaged 7.4. This is what I've been saying over and over and over again. The rates are normal. They're just normal now. Still, during that time, the economy thrived. Stocks thrived. The return on the S&P 500 averaged 10.5 annualized return over those 40 years. And this resilience should continue even if inflation stays at this higher level. I am not suggesting we need inflation at higher levels. I've mentioned on this channel before, I actually debated this subject back in it was either my last year of high school, first year of college. It was the debate topic was, Is this a problem if inflation gets over 3%? Well, inflation can be a horrific problem, and it certainly is a problem when it remains at 3%, 4% year after year after year, unless people get used to it, and then that's another problem. But to their point, 40 years of inflation at very high levels with interest rates at very high levels, and we had a booming economy. Now, this economy is very different than that economy of those 40 years. That was a growing population based on people having actual babies, and the babies were very young, and there was lots of them under 30. You may remember the average age was under 30 in those days. Now the average age is way higher, I think over 37, and the real population is over 55, and that's where the wealth is. That changes everything with regard to how people invest, with how they spend, and what their earnings are. So we have to be very, very careful. Vanguard this morning is out saying they don't think the Fed is going to cut until December. Whoa, that's a biggie. All right, this is breaking. Pending home sales rose 4.8% in June from the previous month, according to the monthly index released Wednesday by the National Association of Realtors. Pending home sales reflect transactions where the contract's been signed. I think you know this. The sale's not closed. I think that's what pending actually means. Economists view it as an indicator for the direction of existing home sales in subsequent months. The sales pace exceeded expectations on Wall Street. Economists were expecting pending home sales to rise 1% in June, but instead they rose, what did we say? 4.8%. The sales pace exceeded expectations on Wall Street. Economists were expecting pending home sales only 1%. Transactions were still down 2.5% from a year ago, and all of these are seasonally adjusted. The big picture says Market Watch, while some buyers wait for mortgage rates to drop before enacting an increase in housing inventory is prompting others to snap up homes. So we've got prices coming down a tad. You've got a market which has got a little bit more inventory, which is, new. That's a new idea. It's been no inventory for years. And now mortgage rates coming down. So what does that mean? We're getting close to the end of summer. Look for increased housing activity in July, August, September. I think you're going to see, well, maybe not July, August, September. I think you're going to see next month, maybe not. August and September, I think you're going to see a lot of increased housing activity, but that's just me. All right, let's take a look at where the markets are right now. We will start with the regular suspects. Tesla's off of its highs for the morning at $8.72. It was up over 10 at one point. We've got the Dow up 107. It was down not that long ago, up 107 now, but the NASDAQ is the champ this morning, 398.57. Where is the rotation today? There goes that. We're at the top, or we're at the bottom of that roller coaster. Holy cow. S&P up 83.80. 84 now. It's going up. NASDAQ over 400 now. Wow. It's just continuing to go up, up, up. All right. We've got the rest of the Mag 7 all doing well, except for Microsoft. Of course, Microsoft had that miss on their Azure part of their business. Other people this morning, like AJ, suggesting it wasn't that big a deal, wasn't that big a miss. But we've got NVIDIA up this morning, $10. Do you know what $10 would have been a few weeks ago? That's right, over $100 that NVIDIA would be up before the split. Up $10 this morning. That's massive. Okay, Microsoft is the only one down. Meta's up $10 also. Yeah, everybody's up. Everybody's up. Okay, and then we've got the Cathie Wood stocks basically all up. I found out what happened with 2U, by the way. I mentioned it a couple of times because the stock was just going crazy. They declared bankruptcy is what they did. So apparently they needed to declare bankruptcy. I didn't read the article. I might have to take them off my list if they're now bankrupt. Okay, so we've got, yeah. All right, let's go ahead and take a look at the bonds. We know those are dropping this morning. Not big, but not bad. Under 4.1. We are now on the 10-year at 4.096. That is down 4.4 this morning. Will we go into the 3 territory? I would say there's a very good chance if we get even the slightest slightest language from the Fed, anything that they could pick up, we can see the 10-year dropping into the threes. We've got the 2-year at 4.346. That is now 25 basis points. The spread widens and widens again. Wow. There's another roller coaster for you. All right, the 2-month is 5.373, barely moving this morning. And of course, it is now up 100 and I don't know, 23 or something. I don't know. It's just a crazy, massive inversion there. Okay, oil. Well, okay, so we had a lot of activity in the Middle East overnight. And that activity with a couple of the top people that Israel wanted to eliminate from their enemies list got eliminated, got killed. And so they're saying that maybe there's going to be increased, war, more kinds of rockets going back and forth between various countries. And one of those people that was killed in Iran. Or was it Beirut? Yeah, one was in Iran and one was in Beirut. So those are pretty interesting locations for these kills to take place. So as a result, you've got oil bouncing back a bit this morning, up 3.29% to 77.19 for Texas Intermediate. And we have got Brent up only $3.50 more than Texas Intermediate, but it's back over 80 at $80.69. In the meantime, natural gas continues to fall $2.04, down almost 4% this morning. I think we're going to be looks like we go into the twos. We'll see what happens over the next couple of days. Gold, the safe haven in times of these troubled times, it's up 2,471. That is an all-time high by a bunch, and by probably $20 a share. We've got silver trying to get back to 30. It's at 28,955, and copper is up 2.51 this morning, moving back up in $4.08, almost $4.19 almost. All right, then you got the yen finally going up significantly against the dollar, up 1.7% this morning, and that is due, of course, to finally the Bank of Japan, the central bank intervening, up 25 basis points on their interest rates, making it just barely above zero. You have got the euro, the US dollar is up against the euro by 0.22%. You've got Bitcoin. Bitcoin is up this morning, but only 274 at 66,096. So that couldn't be any more in the middle of their range. You have got I keep on going, but there's nothing to keep on going to. All right. So you've got Tesla now at this point is up $8.18. So another dollar off this morning after being up over 10. It is now only up 8.18. I would take it up 8.18, wouldn't you? But there's a lot of day left. We don't know where we might end up, but if you come back and see me with the Jeff Lutz program later today, Scott Walter later today as well, two great opportunities. There's a lot to talk about with Scott this week, a couple of things going on that are worthy of conversation. And then Jeff Lutz is always fantastic to have on board. Listen, last night, wow, had a great conversation with Nicholas Gibbs. Yeah, I know it was long. It's over an hour, but you don't have to listen to the whole thing, or you can speed it up. I recommend you go back and take a look at it. I will put the card right there. And then finally, going down the description, look up that thing. It's called Patreon, and help support the channel. It'd be phenomenal to have you help out that way. All right. It's been great talking to you.